I think for companies that are just beginning their efforts to expand to Europe, this is going to be a bit of a shock, just like it was to all of us as we adjusted to the Brexit. As you know, I ran a European operation for a company, Pure Software, when I worked for Reed Hastings prior to his big success at Netflix. And we chose to go to Amsterdam in that case, in part because we wanted to be on the continent. Now I think you're going to see people are going to take a second look at places like Amsterdam, Brussels, Ireland, other places that are still within the EU as they adjust to the news of the UK kind of pulling out of the alliance.
How much do you worry, though, that other countries in the EU ultimately pull out, too? That there's a run for the... I mean, the worst-case scenario is that this is just the first domino.
Right. So I think that, there are many winners and losers in the Brexit, some in the tech sector, some more broadly in the geopolitical sense. And when you start looking at things like what's happening across Europe now, all of the kind of extreme right-wing parties, what George Friedman, the historian, calls the ethno-nationalists, sort of the Trump equivalents in France and Holland and other places, they're the big short-term winners in this. And so they're gathering a lot of attention, getting people to pay attention to the notion of maybe we should pull out too. And my belief is that that's probably not going to happen. I think this is going to be relatively isolated in terms of what's happening in the UK. And I think we're going to begin to see this settle down in the coming weeks as people sort of process this information.
In the medium term, what kinds of companies are going to see the biggest impact from this? Is it the Amazons of the world that are trying to move physical goods throughout Europe and have certain bases of operations? Is it data center players that are trying to put data centers in certain areas where they can serve all of Europe with confidence that they're going to have to abide by the same rules? Is it internet players who are dealing mostly in bits, not atoms?
Right. So I think those are great observations, John, but I would step back a little bit, think about this a little bit more basically. So I ran sales internationally for a couple of companies, and here's how it works. If you've got a lot of exposure to Europe right now, particularly the UK as a market, your sales reps are coming back and saying, hey, my customers are getting a little nervous. I'm not sure I'm going to get my orders in this quarter. If that starts to roll forward, then you're going to see those companies with the highest exposure to Europe and the UK, the large software companies, the large players in hardware, those are going to be the ones that are going to be the most at risk. I think the broader players, the internet players, the e-commerce players, and so forth, the risk is going to be mitigated for them often because they have a large U.S. presence. If you look at one of our companies, one that we chatted with you about here, we took it public on the NYSE a couple of years ago, Chegg, they're almost entirely focused on the U.S. market in ed tech, very stable space, growing nicely, not a lot of exposure. So we're going to see those companies in the short term kind of look like the winners, and we're going to see some of the companies with the broader exposure, we're going to have to look more closely there and see where the impacts are going to be in this quarter and next quarter.
Are you less likely to back an entrepreneur in London today, perhaps more likely to back one in Barcelona or in Berlin?
I'd say if it's a very specific type of company, that's possible. But if it's a London-based entrepreneur who happens to be named Jeff Bezos or Reed Hastings, then we're going to want to back them no matter what they're doing. So it largely depends.
But there's no sense that we're going to press the pause button just on Europe completely.
No, I wouldn't say we're going to press the pause button. It's too important of a marketplace. It's 340 million consumers. It's the most common market trading partner for most U.S. businesses. So, yeah, yes and no. But again, at the end of the day, Andrew, people are going to want to practice commerce, right? They're going to want to engage in commerce. There will be workarounds. There are going to be things that we can't even anticipate right now. So I think the tendency in the short term is to dig really hard into the negative. I think what you just saw today across Europe and the U.S. markets is people stepping back and going, okay, maybe we overacted a little bit, which is normal human nature.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.